Okay, good evening, everybody. Hope everyone's okay. Hope everyone is well, and obviously, hope everyone can hear me. Um, yeah, we're gonna talk about Bitcoin. Gonna have a bit of a, should we all just take a bit of a fresh approach? And there's a dual meaning to that heading as well, because I want to just have a look at something else which kind of fits that title, if you will. But for those of you that didn't make it on Saturday, and a couple of people asked when. I don't know, the presentation I gave will be issued. The honest answer is I don't know. I was up second. The first one's already out, so I'm going to assume mine is next and the one that's been worked on, and that should come out, I'm kind of hoping, tomorrow at the latest. If I know any different, I will let you all know. For those of you that are wondering what it was about, it's basically just, do we need to accept that the 4-year cycle isn't broken? And if that's the case, what's it actually mean for 2026? And the short answer to that would be we are in a bear market. I think most of us know that. And we, if the 4-year cycle is to stay intact, can expect a bottom late summer, early winter 2026. So as painful as 60K was, and some people may view 67 now, we may have some further falling to go. Doesn't mean that won't be pullbacks in that time as well. So I just want to make that clear. But that's kind of where it is. It's worth a watch. I would always say that, obviously. But without any further ado, let's just jump into where we are in the charts. And I'll be honest with you, not much has actually happened in the last 7 days. 7 days ago, we were sitting in around 66,000, and that's pretty much where we find ourselves right now. Altcoins are a little bit under where they were, but not that many have fallen too painfully since then, obviously, not since all-time highs. But if we look at Bitcoin 3-day time frame on a chart which is kind of looking a little bit, I can't tell if it's Ghanaian, Cameroon type flag with these green, yellows, and reds. Probably not the right order, but I've just added those in because it was just too many whites. And I was kind of looking at, we're bouncing in and around 72 to 64 at the moment. We're kind of stuck in that zone. Some other levels are going to explain why we may be there for a bit. So I was thinking, right, okay, that's just the area we're in. We start falling down those, we're going to get towards danger zones, probably looking around about 55.5 is a bit of a danger zone, if I'm being honest with you. And we can start to sort of have some sort of optimism if we can get north of 78,000, where some of these other previous support lines are. I mean, I've left the ones in the 90s white because that would just be beautiful if we managed to get all the way up there. But yeah, you can kind of see we had the big fall, bit of a pullback, and we slowly started to bleed down a little bit since then. So what does that mean at the moment? It doesn't feel like we're forming a bottom, I'll be honest. If anything else, we're probably just moving out to the right before falling down, but we'll have a look at that on the lower time frames a little bit later on. What I do find quite interesting is Bitcoin dominance, because it doesn't feel to me like Bitcoin's fallen any harder than the majority of altcoins out there. But actually, Bitcoin dominance over the last 2 weeks has kind of reset from that 60% level down to around about 58.5. And although that only sounds like a 1.5% drop, because it is, it's still a fairly decent amount. So there is, some life somewhere in altcoins. Pippin was, or no, it's down 20% today, but it had been rallying incredibly hard over the last week. So maybe that's got something to do with it, although it's not that high in the top 100. So something to certainly keep an eye on, but we are just within that 60% to 57%, and it's kind of no man's land. Well, we're stuck in there, so not getting too excited about that at the moment. And when we look at total two, yeah, okay, we can see there's been a bit of an uptick, ever so slightly better than Bitcoin, because Bitcoin was just running sideways, whereas this obviously is moving in a sort of upwards channel. Now, there's the bear flag kind of connotations to this at the moment. So, we've got to be a little bit careful. But we can sort of see that at the moment there's sort of some sort of trend line there. And we haven't really dipped our toe below it. So as long as we keep on holding it, maybe we can start building up and up and up. But we're below 1 trillion. And it's just, again, 125 is what we need to get to before we can even start talking about some levels of optimism again. And yeah, that's where we find it. And then BitTensor. And the BitTensor's a bit interesting, actually, because it has actually done okay. In the last week, this time last week, we were sort of sitting around about 150. We're now at just under 200. We have tried last couple of days to peak our head above 200. We've been knocked back down each time. So there's obviously some selling pressure there. but it's a fairly decent recovery from a fairly convincing fall from grace. And I suppose it's to be expected. We do expect these sort of pullbacks. So the question is, can this be sustained? Are we building for a bigger move up? Or is this just a sort of a pullback before further falling? So again, when we go on the lower time frames, we will take a look in that. Hello to everybody in the chat. Glad you can all hear me. I didn't get any real questions in the vendor chat except for when the video was coming out. There's a couple of you asked about that. So I've answered that. So if you have any comments, feedback, whatever it is, your thoughts on where we are, what we're doing, what you're doing, feel free to drop it in the chat and we can discuss. Moving through onto the next thing. So taking a different view, I thought I'd try and start with a news story that would have got us excited 12 months ago. And I still think it is worth talking about because it kind of slipped a bit under the radar. But at the end of January, the SEC and the CFTC, so the securities and then the commodities teams within America, decided they were going to relaunch Project Crypto, as they called it, trying to do this, as it says in the title, a joint harmonization initiative. So really trying to flesh out exactly what cryptos are, how they're going to work in the new financial world, and try and put some framework together so that we can, move forward understanding the minefield that it is. And the reason I mention about this fresh approach is because if you go back 4 years, 3 years, 2 years even, the days of Gary Gensler, the SEC going after Kraken, going after Binance, going after Coinbase, going after Ripple, using this Howey test about a security and all that. It is, they have taken a fresh approach to it. This is something that they campaigned on. And we do have crypto-friendly heads in both of these departments at the moment. And the SEC has kind of, basically said, look, it's not a security. We need to work on what it actually is, but it isn't a security. The Howey test doesn't really work on it. And let's try and bring that one forward. And I think 2-3 years ago, this would have been great news. We would have heard about it a lot sooner because it is a positive step forward in terms of the framework of what cryptocurrency can be, particularly in and around Bitcoin, potentially Ethereum. But I have to say, just given where we are in the market, bullish news just doesn't fly right now. And this is a positive step. And for those of us that manage to stay around to the next cycle or the cycle after that, and we start to really understand the landscape that is crypto, this will be a point where we'll look back to and go, this is when they really started to take it seriously. And so they are looking at it with a fresh approach. They are trying to provide that clarity within crypto. And hell, if we even talk about the Clarity Act as well, there was some real vigor about that last year. It's not really done much. It's been worked on in, behind the scenes. I know the banks aren't particularly happy. Coinbase have pulled their support of it, which is just basically a bit of a pissing contest right now because people aren't getting their ways in things, but it is starting to be fleshed out and we are moving from a framework point of view, from a, legitimization point of view, in these steps forward, which we will reap the benefits of those in future cycles. Right now, though, particularly in this part of the cycle, news like this, it just doesn't really matter. But I do like that they are taking that fresh approach. It does feel like the people that are going to be in the crosshairs of these organizations are genuinely bad actors, rather than just, we don't like crypto, so we'll go after any low-hanging fruit there is. Don't hold me to that in case they start taking people down left, right, and center tomorrow. But that's certainly how I felt of where it was going. But we kind of then roll into something that I alluded to last week, and I think it still stands quite valid. And that is, we've started to get earnings reports at the moment, particularly those within the NASDAQ or certainly within the S&P 500 from the tech sector, etc. And although the earnings reports have done well, generally it feels like the share price of these are dropping. And there is, as it says in the title, jitters on Wall Street about AI. And it's a two-pronged attack to that. So one, as we discussed, it is the sort of the value that has been attached with AI. So a lot of these companies, Microsoft, AMD, Amazon even, putting hundreds of billions of dollars into AI. And the shareholders are now sort of saying, well, look, although earnings are up, where is this actually going? Where's the revenue that we're actually seeing from the money that you are investing? And how long is this tap going to be on until we're going to start to really feel that in our back pockets? And so there has been some sort of questions about whether or not the value of AI needs to be revalued, which is a concern if you think for the last 3 years we've all talked about the fact that Nvidia has basically carried the Nasdaq on its shoulders, and the Mag 7 have pretty much carried the stock market as a whole on their shoulders off the back of AI. Then the concern would be, well, if the market's already starting to get jitters, are we starting to see a repricing taking place? Now, Nasdaq at the moment, this is the weekly time frame, 50 and 20 EMA, the orange and the blue. And okay, we lost the 20 EMA, we were sort of dipping back down. It's not the worst in the world, you could quite conceivably call this a pullback and nothing more. But what we just need to just keep an eye on, 4 red weeks in a row on the Nasdaq at the moment. If we start to lose this blue support of the 50 EMA, the question really comes is where and how do we fall? We look at the last time we reset about a year ago with the tariff crisis, we fell all the way back down to the 200 EMA. And at the time we went from 21, well, nearly 22,000 down to 16 and a half. V-shaped recovered out of it, of course, but that was absolutely debilitating, not just for the stock market, but also for crypto. And again, potentially we could see another fall of a similar magnitude. We're suddenly sitting at about 25. We could quite conceivably go down to the high 19s, 20,000 sort of level, another 5,000 point drop. What is that going to do on things that come in? So it's something that I'm sort of at least keep an eye on. And as I mentioned, not in my talk, but in one of the other people's talks on Saturday, the reality of it is RT is very much into the decentralized AI crypto space, one in particular. And so we should really be trying to understand how the wider market views centralized AI as a whole, because that is going to have an impact on our baby, if you will. So I would just sort of say, just keep an eye open for it. Nvidia's is obviously going to be the big one. AMD, they sort of dropped because in the statement there was forecasts of sort of lower levels of chip sales in the future. We can kind of see earnings came out. We were at 220 and we dropped all the way down to 195. Not a huge drop, it's still a decent drop. But Nvidia, I think it's the end of this month. Yeah, 23rd, so it's a week we get theirs. It'll be interesting to see how that plays out and where they are going. So that's the one I'd certainly be looking at. Monday next week after the close, we'll have a look and see what that does. On OpenAI carrying 96 billion of debt. I mean, well, there you go. So people are effectively borrowing off the back of the name of AI and the possibility of what it can do. And hey, we all know what its possibilities are, but you ask Joe Bloggs in the street, they don't even understand what they're using AI for. They're effectively using AI as a Google search when they ask Grok or ChatGPT a question they can't be bothered to type into Google. So yeah, we really need to start to see that payoff there. But that being said, I do think it is here to stay. I think we just need to consider how we revalue that. And interestingly, Michael Burry, and I get it, some people love him, some people hate him. He was right back in 2007, and you can have a positive or bad word to say about him, but ultimately, this man at the end of last year put shorts on Palantir, Nvidia, and a few others. He has not had one single day of drawdown. He hit the absolute Pico top. His $912 million Palantir short position is up 35%, okay? Oracle stock has fallen 51% from its peak, also delivering gains. And I think he reckons Nvidia is going to go all the way down to about 110. So we shall see where that goes. But he is a contrarian. He sees opportunities where others are too lazy to check, shall we say. And so I think it's just, it's worth at least examining what he thinks he's found there. Have I got two? What's that? That's the same. Okay, fine. And then we try and have a look at some of the rest of the day. I'm going to get onto crypto, don't worry, in a second. So CPI 2.4. It came in low. Brilliant. We are cooling off, just what we need. But markets didn't really seem to react that well. As I say, the Nasdaq down last week. Sorry, that's Nvidia. Apologies. Nasdaq down last week. S&P down last week. Dixie actually down last week. Okay. And then, as we saw, Bitcoin continuing on its move down last week. So no real excitement around getting towards that 2% mandate, which we know we need to achieve, but we are working our way there. And I think the real reason behind a lot of this is something that Bijan's put in the chat. So I've just gone in and put it in Discord. I've just gone and stolen a couple of his posts, into tweets, and it's all about the jobs. It's all about the employment data. So jobs openings weren't as many jobs openings as one previously, and also as they estimated. In fact, it was 700,000 openings less than what they had estimated. So not looking great from a jobs point of view. And then if you have a look at what the US have been doing year on year for the past 2 years, 3 years, they have been retrospectively revising the jobs data from basically the Biden administration, trying to correct it. And they have managed to knock off 2.1 million jobs over the last 3 years that have been falsely claimed, I suppose. Now, I don't know how that sort of works in terms of they just go back, cross that number out, and adjust it, or does it sort of like do some sort of behind the scenes magic to sort of affect future figures as well? I honestly don't know, but the reality of it is there are far less jobs in America than they were previously reporting, which kind of screams that obviously more people unemployed. Okay, what does that kind of lead towards from a macro point of view? Potential of a hot stock market as well. Maybe we are due a recession. Maybe we are due some sort of crash, flash crash, or whatever it may be, to just sort of see us through before we have that next uptick. So there's a lot of things bubbling under the radar. And when you look at sort of the revision of the job state, the one thing that is clear over and above is the interest rates. It just doesn't matter about the CPI data coming in low, getting close to that 2.4. This thing hasn't moved. In case you can't really see what it's saying here, but basically it's a 92% chance that the Fed will not cut the rate in March, month tomorrow, 4 weeks tomorrow. They will not cut the rate, 92%. It's been in the 90s for a considerable amount of time at the moment. And so it looks like we're going to stay that. So people just thinking, your rate cuts are coming, the data's looking good, CPI is coming down. There is something that they are not happy with. Doesn't matter what you think of the new appointment of Walsh or whatever, he still has to actually, and he may be a Trump lackey, but he's still got other responsibilities. He's got other committee members that he's got to try and get on board. It's not like he just go in himself, be a dictator and go, this is what I'm doing. I don't know how many board members are, 13, doesn't really matter. They've all got to come to some sort of consensus on where it is. And I know I tell you, this is 4 weeks, so anything can change in 4 weeks. But then we see end of April, still a 75% chance that it's going to be no rate cut. So actually, we're now talking middle of June before there's only a 50% chance that we actually see a rate cut there. So 6 months into the year before we see another rate cut. And the rates are still, it's not like we're close to zero, close to one, whatever. Again, it's those low rates that we want for QE to really start to be a thing and to take off. We're talking about 3.25% here. That's what we could drop down to. So it feels like we are a long way off suddenly those interest rates dropping. And I've not bothered preparing it, but I've shown you the chart before. We see sharp drops in interest rate and unemployment rising. There's normally a market reset, we'll call it, maybe not a recession, although they are previously all have been recessions, before we actually see that uptick, the QE taking in. But remember, they turn those money printers on. It doesn't mean there's money in the back pocket straight away. It takes months for that to cycle through. So I don't think the economic outlook is looking as great as possible. Now, that being said, people have been talking about this crash for the last 3 years. So, as long as we can stay above 23,600 on the NASDAQ, then that's fine. We'll just continue this move. I mean, this is a whole year's worth of growth there. And so, yeah, that's absolutely fine. But if we start to lose this one here, the question really needs to be, right, what is it that we're sort of holding on to? And I think we will suddenly just start to see a bit of a house of cards. Sorry, Bijan's put, I don't see with all the different companies launching similar products that they can all win. Nah, you're going back to AI. I get it. I'm not going to pretend that I am a huge understanding of AI, but I don't know how similar some of these products are. or more just what is at the moment public facing stuff that's available. That's sort of like just text to data or whatever you want to call it, in terms of ask it a question, it comes back. Yeah, they're all doing that. That's simple. They can just have that running in the background while they're working on other things there. Anyway, Bijan then I posted on the Discord a post and I made about AI, which is quite an interesting perspective too. Okay, let's have a quick look. Let's bring it over here. Oh, you just posted it now, have you? Here's why AI bubble will implode. China is using the totally different approach to AI. Open source, mass scale, cheap. The West, closed source, private, profit driven. China will mass produce AI and export it everywhere, like their products. We race to the bottom, which can't compete. Yeah, but I suppose it's the quality then, isn't it? So as I understand it, DeepSeek's pretty fast and it's pretty cheap, but the information you get back's not always the most reliable on. I say DeepSeek. That one is Chinese. I'm sure it is. Anyway, maybe I'm incorrect there. So I'm not dissing it. Let me have a look at it in a bit more detail afterwards. But thanks for that one. So yeah, and then as if it can't get much worse for us, crypto sentiment hits extreme fear. We knew this in extreme fear, but the interesting part is Bitcoin sentiment is at 4-year lows. What happened 4 years ago? I can't quite think. Where were we 4 years ago? Oh yeah, we were in a bear market. Okay, and it's saying here historically oversold signals and potential seller exhaustion. Absolutely, but this time 4 years ago, that's what we were thinking after the Luna crash, and then there was another can of worms, and then another can of worms that just kept on finding new reasons for sellers to find some excitement again. So I don't think anyone watching this, anyone in crypto right now, thinks anything but we're in a bear market. But everything is all leaning towards that case. And right now, that fresh perspective we need to be looking at is, okay, how can I best protect my portfolio then? If we're in a bear market, typically what happens in a bear market, prices go down. There's no confirmation we found the bottom yet. So our fresh perspective on what we should be doing is actually trying to understand what is best for our portfolios right now. How can we best do that? And as I actually mentioned on Saturday, you'll see in the video for those of you who weren't there, it's all down to your risk. If your risk appetite is, I need to protect it, I've got to think about bills or whatever, maybe stables is the place to go. And then low, good risk management, low risk trading to help sort of like, move with the market and bring a little bit extra in. If you're happy to ride it and you've got that runway in inverted commas for the next 4 to 8 years, then hell, if you want to stay in detail and just collect staking rewards, knock yourself out. I'm not trying to tell you what to do, but the reality of it is we're not in a bull market at the moment. It doesn't automatically mean that everything has the Midas touch and it's going to gold. We actually think some things may fall away here. And if that doesn't sit right with you, it's time to ask a question of what is best for your portfolio. As most of you know, I'm 75% in stables at the moment, and I feel very comfortable right now being there. Yes, okay, we've seen things like Tau move 40% or 30% this week, and I could have, benefited from that only if I'd wanted to buy at the bottom. I've been fortunate enough to be able to do a little bit of trading of Pippin, which has moved very well. And okay, I'm not making huge gains from it, but it's something that I can sort of just, tick along without having to do that. But again, there are other things outside of Bitcoin, outside of cryptos that we could potentially look at in the bear markets, and just have those fresh eyes on instead of just sitting on our hands for the next 6 to 12 months, however long it's going to be until we get out of there. Bijan's put, the total altcoin market is roughly the same as almost 5 years ago. The only difference back then, 430 listings versus 31.8 million. Jesus. So you're right. I mean, it's the same amount of money floating around, but it's just spread across so many other things, which is why the vast majority of alts we'll see have not made all-time highs. And then here we are, fear and greed. I mean, we got to double figures, but we've been down as low as 6. I think the lowest on record is 5. Obviously, last week we were at 9, 12 yesterday, down a little bit today from yesterday. But these are not, I'll just YOLO into stuff kind of levels. Of course, bear markets at some stage you have to take a risk and dip your toe back in, but you do it off confirmation. As we're going to see in prices at the moment, it doesn't feel like we've got confirmation that that bottom is in, whether you're working from a time frame point of view or even just sort of other indicator point of views. So with that being said, let's have a look at where we are with price action. 12-hour time frame, you've all seen this one before, and it's interesting to see where we've kind of, we're in the middle of the range from that 74,000 to 62,000, the one level on the Fibonacci in the 618, and the 786 is there, and we kind of been dipping left and right of that, up in north and south, what do you want to be, either way, and we're kind of just resting on that. But to me, straight away, there's so many patterns that you could draw out from this. We had this big drop, 50% pullback, and then we kind of lost momentum. We found some sort of baseline, came back up, again lost momentum, and there's an argument here that all we're doing is a little bit of a double top. And I tell you what, we lose 66,000, and I think there is a retest of at least 62,000, if not the 60K itself. So that's certainly one thing to look at. But the other thing, really, is there is some sort of support line here. We have breached through it, but we come back to test it. How you want to draw this, anyone's game in terms of if you want to use the wicks or whatever. Right now we're just doing the main bodies. We can see we're ever so slightly below that one. We'll give it another couple of candles to see where it's at. But right now, we're in a falling market. We've got a bit of a rising compression. The TA would say that's the direction of travel as well. And so to break that, we've got to get above 72,000, really. We break above this level, we sustain it, fair enough, we can have the confidence. But right now, we're just tiptoeing around an area where cascading fall, we've had a bit of a pullback, we're trying to reset sentiment, which ain't working because we're still in the cauldrons, and then potentially for another attack there. So sellers may be tired right now, but I'm sure they'll find their strength again. I think I can show it better on this other chart. Let's just get rid of these for now. Just look, we've had this fallback down. So this is the weekly time frame now. We had that brilliant wick bounce back up, from 60K all the way back up to 70. Look great, but what have we done over the last 2 weeks since then? We've just continued to bleed back down. We haven't been able to build off the buyers stepping in at 60K, and we're just continuing that bleed back down. That is not a particularly pretty place for us to be right now, as we just keep sliding through. And what's holding us back? So that green line there is 71,000. I know we wicked higher in March of 24, but that all-time high that we set in March of 24 off the back of ETFs launching, it's pretty much where we're running into, we really lost that level, and then we just can't break back above it. And so again, okay, I called it 72 on the 12-hour time frame. But from this point of view, a weekly close above the 71 can give us the confidence. Anything other than that right now, and I'm not willing to step back into the market. That's the reality of it. And I'll take that risk because I got out. I got out at 64, but I haven't really found the nerve to get back in on that one yet. And the 94, 91, 84 levels, well, I'll have plenty of room to step back in before I hit any of those if we break above that 72 on a weekly and close above it. So that's certainly areas that I'm looking at. And then, in terms of the EMAs, I haven't thrown the 10 on here on the weekly. Maybe I will, but the 20 and the 50, controlling the narrative. You put the 10 on. If I can find it. Just, what color should we make it? Yellow, is that going to stand out? Probably not. I'll make it nice and thick. Actually, we're still quite a distance away from it. We can pull all the way back up to the 10. It's at 80K. 20, 88. 50 now is at 92. Wasn't that long ago. We were talking about that being at 100. Pull back over all of those, and we've still not cleared the hump we were at here. Oh, yellow and yellow definitely didn't work. And so, yeah, it's not looking great. Now, of course, I don't think it's down only for the next 6 months. I do think we are probably close to a bit of recovery. You look back on previous 4-year cycles or the bear part of the 4-year cycle, and March is generally a month that we see some sort of relief rally. I was going to say recovery, but that's not quite the right term. So March is coming up soon. So maybe we do start to see in March something coming in. And if we do, maybe I'll take some of that pot that's on the side and try and ride some of that. But if this is a 4-year cycle, that will be short-lived. Okay, that will be short-lived. We will run into issues. Maybe it's going to be the 10 EMA. Maybe it's going to be the 20 EMA. But we will run into some sort of issue, weekly time frame, that will be a real test for us. And if we lose that, then we've got to start asking ourselves, if you're still in, what is it that's keeping you in here? What's your fresh approach that's keeping you in when other things are telling you to get out? And I'm not sure I necessarily know the answer. Now, here's something that I was going to put in the presentation on Saturday, but I think I had enough slides anyway, so I didn't bother. But I think it's worth talking about at the moment. So those of you like the rational route, a guy walking around with a carrot on his head. Some of you don't. That's absolutely fine. But what are we actually looking at here? We're looking at Bitcoin's price over time. We're looking at short-term holders' profit, which is the green line. But what I'm actually interested in is the red or the pink, if you will. And that's the profit reset signal. What does he think that means? It means profit ain't going high up anymore. It's going back down. And where do we typically see that these occur? There, 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 and there. Right, now I've circled them. Let's have a look at the dates on those. 2014. What happened in 2014 for Bitcoin? Oh, yeah, it's a bear market. Okay. 2018. What happened in 2018 for Bitcoin? Oh, yeah, that was a bear market too. 2019 into 2020. So after the 14K peak, what happened? Oh, we dropped all the way down to 4,000. Another bear market. I mean, not quite a bear market, but certainly an area of question. And then we had 2022. What happened in 2022? That's right. It was a bear market. And what do we see again? It's not one line here. We've had sustained pink lines forming just here. Yeah. What can we see from the past? They don't just happen and then we turn around. You know, they happen in the fourth year, the bear market year, and they happen for a sustained amount of time. This is November to July to January. These have happened. We're starting to see those. So short-term holders are not making any profit, which is a fairly good indicator of where we find ourselves. And if I'm to borrow another one of the roots charts, the Bitcoin spiral, another perfect example of where we are. So this segment here, okay, that is Q4s. And in this term, it was 2025. All right, on the outer, it's 2025. Okay. Oops, how do I undo that? I'll use this. And we can see these little blue dots that you see, they are all-time highs. Okay, and we can kind of see that as we come past the halvings, all-time highs start to be made. Okay, that's why we can see lots of blue ones building, because we're just building up. We've gone higher than we've ever done before. And when we're in that parabolic phase, we're always making new all-time highs. But what do we notice? The final one of each cycle happens in Q4. So that's what we'd expect. This is just a visualization of it, of what we get in the 4-year cycle. All right. So we've had this 2025. It's this one here. Yeah. 2021, 2017, 2013, 2014. They're the four. Okay. Got to do this again. What do we now see? 2026 is this here. This is all of 2026. Anything missing from that ever in the history of Bitcoin? It's blue dots. We don't make all-time highs. Why? Because that's the year that we have these significant drawdowns. And what have we had the past 3 times? Okay, just tipped into 2015 there, 2018, 2022. The bottoms, okay? So in terms of the journey we've still got to take, I don't know when it's going to fall. It is getting ever so closer to the right side, but probably September, October of 2026, we can expect to see a bottom. It's a hell of a journey still to go. We've got 6 months, really. Good news is we've had our head in the sand for the last 6 months. So we've already done 6 months worth of pain. But this is a good visualization, if you believe in the 4-year cycle, of what we've still got to come. We have got a year of no, potentially 2 years of no all-time highs, because we'll climb back out of wherever we get from. But we've got pretty much half a year, if not more, of price action before it finds its bottom. Just bear that in mind. We don't have, I mean, you could argue there should be a red circle here right now because we don't know what the bottom is, but we have hit 60K. But we don't normally get bottoms there. So something to bear in mind with that one, I'm afraid. And then someone posted this for me. I think they mentioned that I talked about this a few years ago, and I'm sorry if I don't keep on track of a lot of these charts because there's just a lot of them, and I will try and be better about some of that. But what we're looking at the moment, we're looking at Bitcoin's supply, the percentage of Bitcoin's supply, and whether it's in profit or loss across its entire history. Okay, so the green is the percentage of the supply that is in profit, and the pink is the percentage of the supply which is in a loss. Okay, and just have a look when the green peaks. Oh, it's not there. Try that one again. So when the green peaks, what are we seeing? Any guesses for what years those are? 2013, 17, 21, 25, yeah? So the vast majority of people that own Bitcoin or the supply of Bitcoin is in profit. It's what you would expect. Of course, there's always going to be people that buy the top. And so even at the peaks of the price, still people that have hit a loss, okay? Of course. Why can't I back on that one? That's not why this was sent to me. It's not why I'm here talking about it. The interesting part is this. There, there, and there. So what's that there? So basically, what this is saying is bottoms are typically found when there is an even split of profit and loss. So, half of people who have bought are in a loss, and half are still managing to get a profit. But that is coming really close, okay? And typically the OGs are the only ones that are in profit. They've just held it for so long that they have managed to get. And this is why, this one here is wider than this one here, because there's more OGs and there's more newbies who are in the loss. And similarly, this one here is even smaller because retail even more stepped in. But the point being, I can't backspace on that when we see this cross, and it's not an exact science, but when we see these overlapping each other, and there does need to be an overlap, it's not just touching, that's typically when we find bottoms in the market. So where are we right now? That's the question, isn't it? Well, there is a bit of a gap. We are getting close. All right, that's fine. We're even closer now. So it'd be better if these were just lines and not completely filled in, but it's the best I can do. So we have got basically just over 11 million BTC still in profit, and just under 9, so just less than 9 million BTC are in a loss. Yeah, sorry, I should put plus. So what we're looking for is effectively this, because it's around about 20 million Bitcoin. So what we're looking for is effectively this to move up to the 10, this to come back down, and then some sort of overlap. And when that happens, and it ain't going to happen in the next few days, I promise you, it'll take a while, as you can see how these things are drifting, but that'll be done through price. Then we can start looking at maybe we found some sort of bottom. And who knows if this is real. Oops, what's happened there? I've got to stop that, that's why. Who knows if this is going to play out this time, but if you actually look at this chart, it's interesting that it actually just perfectly points out the cycle amazingly well. The flow of it is unbelievable. The ebbs and flows, just perfectly pick up the tops and the bottoms. Now you could say, well, that's obvious because, when we're at blow off tops, more people are going to be in profit who hold Bitcoin than aren't. Yeah, I get that. So bottoms is going to be either more people are going to are going to be at a loss than at a profit. And that's what this overlap is. It's the losses have overtaken the profits. So that's what we're looking for. It hasn't quite happened yet, but that is what we're looking for. I think it's something that we should just consider. I've saved the chart now. I will try to remember to come back to this a bit more regularly, but ultimately we'll see. And so, yeah, we find ourselves here. Where are we? And there's no denying we're on this side now. I think we've had the anxiety. I think what's coming, as I mentioned, is we're probably going to get a bit of an uplift. I think we're going to get that pullback soon, whether to the 10, the 20 EMA on a weekly time frame, 80,000, whatever it may be. And that's going to cause people a bit of denial. That's going to be, actually, we're all right, guys. We've had the drop. This is the recovery. The data's fine. They're going to cut the rates anytime now. You wait. It'll be fine. And then we'll probably have that correction. So I would just say be cautious with any move there. This is where I'm anchoring where we are at the moment. So we've had that drop. We're sort of somewhere on that climb back up. But yeah, we shall see where that goes. Okay, let's now get into some actual charting. Sorry, I must have just been messing around with Bitcoin a little bit earlier on. Okay, so we're on the daily time frame. We can kind of see from the daily point of view, the 10 is dictating where we are. So since we've had that drop, we came back. We basically moved sideways so let the 10 catch up. But the last 4 days, the 10 said no further. And that's why we formed this right-hand lower side element. Now, the RSI, we're out of the oversold. I mean, we're not massively out of it, but we have bought ourselves that time to at least get back into neutral territory. And we're resetting, which is kind of what we talked about before. So this to me doesn't say, oh, well, we need to go back up. We have to be set. Now, yeah, there is something to say that on the grand scheme of things, RSIs typically do this, but there's no guarantee. It's October, we did that, but it went down to November. And then, yes, we did come back up. We didn't move that far, and we still had that ranging period. And this is what I think we could end up being in. It's some sort of ranging period here where we keep coming back down and retesting this. This starts to working its way back up, and then we have that move back down. I can perfectly see that as something that could happen for us. But yeah, there is obviously a lot of vectors above in which we can maybe sink our teeth into and that move up there. And the one thing that I am interested in from a daily point of view is this 80K level. You got the 15, you got the 800 EMA in and around there. You got the vectors that go up to it. And I could conceivably see, this move up, relief rally, whatever, hitting the 80K. It kind of ties in with the base of the range that we had back through December and January. And then, resetting off these and depending on how long it takes, this 200 EMA may be the thing that comes in and kicks our ass back down. But that's certainly an area of interest for any relief that we see. But we don't break. We don't break 70K and hold it. For me, I think, I don't know why it's sitting down here. That's the retest I'd be expecting. That's 60K level. We've got the vector down here. Maybe we just come down to 62,700. I don't see it particularly holding myself. We get down there. I think the fear is going to step in again. I think the buyers are going to just run for cover. Well, we know what really happens with market makers. They're buying when it goes down, but you get my point. I think we're going to have more retail or weaker hands selling through into that. And then we've got these significant levels. We identified these previously in terms of vector candles we're going and some of the areas I'd be concerned about if we lose 50K. So I kind of talked about those last week. I don't necessarily need to rehash those. I think they're ultimately still in play. We will look at the 4 hour, but as I said, not too much has really happened. So you can really feel how we have moved sideways since that bottom. Yeah, okay, we have been making higher highs, but we haven't been, higher lows, but we haven't been making higher highs. So we've just been going, squeezing ourselves, really, symmetrical kind of pennants, if you will, in a downward market, being rejected by the 50 EMA on the 4 hour time frame, neutral in the RSI. Gun to the head decision. My view is we probably range to fill this apex and then we go that way. Unless there's something to step in from a narrative point of view to take us up. That's it. Maybe we flash up here, wick up and come down just to really get everyone excited and mess everyone around. But the general consensus of the direction I feel we are heading, unfortunately, is back down to that retest of the 60k. That's my opinion, and live by it, die by it. I'll reevaluate if it breaks the 71, 72 level that we mentioned. Breaks and holds. That's what we're looking for. BitTensor. Oh, we'll start with the daily. I'll put a fib on the Pippin, don't you worry. So BitTensor on the daily, we had this sort of level 150, a kind of level here. We've had this move up, but we had some vector cans we nicely ate through to come back up here. What's holding us back is the 50 EMA. I'll tell you what, as soon as we're going to throw some fibs, let's throw some fibs on this. I've not done it. I'll throw two. I'll throw one from up here. Okay. Not too much from that one. This one down here. Looking a little bit better. I suppose not quite lined up as what I'd like, but anyway. There we go. Don't always work. Right, let's get rid of that. What I would say, we came back up to, what was it, 214, something like that? And that is the base of this level here, yeah? And then these were pretty aggressively bought back off afterwards. So we have had two fairly decent moves over the last couple of days, but not really seen much from it. And as I say, that 50 EMA has just battered us down. In the past, we have got it to the top of the cloud. Maybe there is that move. I talked about that move, sort of the 240 being on the cards. That was because the 50 EMA was back there at the time. But the cloud's still within that region. Maybe that's something that we have a look at, but we don't normally hold above it. And the reality of it is, unfortunately, unless we're breaking 300, we're still within that downtrend. And that's the reality of where it is. Now, I will say the RSI was pretty low, so we have given ourselves some room to move it there. But with where this sits, I don't see that this is necessarily a bottoming pattern at the moment. The V-shaped reversal has already found some area to struggle on. I can quite happily be wrong. I'm sure, Bitcoin has done that before. And I myself even said, when we've come down to this level, we have historically found strong bounces. So I accept that as a point, but it has to prove it to me at the same time. We start getting above 215, 220, and it stays above there. Maybe there is an argument to be had about a move to the 300s. Maybe there is a long opportunity to take there. But for now, we're just doing what we've unfortunately done. Lower highs and lower lows. But I don't want to knock it. It's up $50. It's up 33% this week, which is far better than the vast majority of other altcoins out there. The only one that's done better is Pippin, and Pippin looks like it's had a bad day, but trust me, it's had a hell of a week to the upside. So that's just what I'm kind of looking at there. I'm not in BitTensor at the moment, so I am watching it, seeing if there is a long or short opportunity, but I have no idea from a fundamental point of view if there's any news backing that up. And we can now see down on the 4-hour time frame, the 200 EMA really sticking its nose in. I will say at least we have stayed above the 50 EMA, the 4-hour. I will take that as a positive. And so really, as long as we can remain above 180, we can just build that momentum, and then maybe we can start to challenge for that move up there. 265 at the moment. Maybe that's the thing we can do. And to be fair, we've proven that we can move $50 in 48 hours. So what's another 70? It can absolutely be done there. And something that we can have a look at. I will look at Pippin just because it's here. You want to fib on this? Let's see. This is the move. So, and I think I posted Pippin is a love-hate relationship for me. So I put a long in at 16 cents. It's like, it might have been 17, and I had a stop loss. And I knew I shouldn't have had the stop loss as tight as I did, but I kept it tight because I was trading on the hourly, and it was at like 16.5. It hit, and then look what's happened. It's gone from basically my entry at 17 cents to 77 cents. What a move that has had. That's like a 4x in the space of a week and a half. Yes, we've had this pullback. I am in a short at the moment. And I actually kind of feel that this is probably primed for a move back down to the 50 EMA. I'm trying to think how I'm going to draw this fib, because well, there's only one place I can draw it from. That's there to there. That's it. That's all I can really see for you to do right now. Try and tidy it up. I'm going body to body. But that's honestly how I would draw it, because otherwise we take it from all the way down here. I mean, I'll do that one afterwards for you. What have I just gone done? It's up and down, yeah. There we go. So yeah, and you could argue that the pullback it's had, the 50 cents, is the 236. But as I say, I still think there's a move to the 50 EMA, which is probably 382, close to that, the 40 cents. That's where I'd be looking. Just in terms of, I mean, we have a bearish divergence on the RSI for one, but even just on this point of view here, the RSI got to 80, needed a bit of a cooling off, but quite a significant bearish divergence there. So I am expecting this to have a bit of a recovery. I will now draw it. I don't know where you got in from, but we'll draw it from the very first bit of the move up to its new high. And that takes it down to 30 cents. Yeah, 382 is back down at that 18 level. Do I see it getting all the way back down there? Maybe, but as I was before, just having a look at this 200 EMA. Once it lost the 50, I was just waiting for the 200 EMA. That's kind of where I'm thinking. So if it has a hell of a fall through, maybe it gets caught back at sort of like 26. But this one has moved really well. It has defied the market. So well done to it. And for anyone that caught it, I'd say love, hate for me. I've had a couple of wins and a couple of losses, but I was kind of chasing my tail from that $17 one. And even today, I tried to get in at 64. It missed by an absolute smidge, and I ended up getting in at like 58. Stopped, and then I've re-entered again. So I might regret that one. But anyway, let's have a look at some of the others. I'm not going to go into it. I just want to kind of give you the sentiment of where the rest of the market is. BNB, it's down. Dash just recovered all of its gains it made. Ethereum, I mean, looking very much like Bitcoin, very sad and weak there. Again, the 10 EMA is just sort of controlling the narrative. And we're below 2,000 again. And I don't think 1500s is off the cards. Really? I mean, how can you say it's not? If we fall here, what's really left to catch it? Okay, we've got 1750, which is where we got to before. But I can see us trying to attack that wick down there, 1400. Casper continuing down, Link continuing down, Near continuing down. You get the point. Solana continuing down, SPX continuing down, XRP continuing down, Zcash. It's continuing down, but it's looking a little bit better than the rest. But that's just generally where everything is, and that's why I am very much a protect my portfolio as I can. For now, I will trade, but I'm happy to just sit in stables. And really, it's what do I do with that remaining 25 Bitcoin? I think I just leave it, and that's my bet against myself being an idiot. I think that's the smart thing to do. And we'll take that there. In terms of some of the other sort of metrics, I mean, ETH BTC is up today, but generally it's still trending downwards. If ETH goes lower than 900, it means it's made a lower low on the 4-year cycle. It must have got, I think it got lower than that, didn't it? Monthly. Yeah, it got down to, okay, it got into the 800s, but I get your point. Sorry. We were on the daily, weren't we? Well, let's just have them quickly. Ethereum on the weekly. I mean, it's definitely overextended, and if I'm saying that Bitcoin could have a relief rally to 80k, I think 2,600 is easily on the cards. Then we are down, down here for a bit of a low. Now it doesn't need to mean because the weekly has to go all the way back up to 70, but we may see sort of a move back up to 40 or something to just continue that move down. And so yeah, maybe this, whenever it finds a bottom, and if March is the month, we have that sort of rally here. And again, Bijan, I think you posted, let me get this up. Ethereum's had like 6 monthly reds in a row or something ridiculous like that. Where's the, here it is. Let's change that to Ethereum. Yeah, so Ethereum has September, October, November, December, January, and currently, I mean, February, unless it makes 20%. it's at 6 red months in a row. And I mean, it made 9 red months in 2025. So it just hasn't been great at all. Um, anyway, in terms of some of the other thing, I mean, Bitcoin dominance, not Bitcoin, USDT dominance, it's not quite at 9, but it's still ticking high. People are sort of wanting to shelter as best they can in sort of stables. Really want to see that ticking back down, obviously. The VIX was up today, but it's come back down. And I didn't even mention, but there are, tensions in Iran and Taiwan. I think the US just signed some $11 billion military deal with Taiwan to protect the data, the chips, I'm sure. We had a look at the NAS and we've kind of had a look. Gold, I mean, gold is down, but gold's so high from previously. It's not even back on the weekly time frame to it's a 10 EMA. So although it has hit both of those with that wick, but this could go all the way down to 4,000 and still be bullish. It'll feel painful for those that have got in at 5,800, but it could conceivably do that. Silver's a bit of a different story in that it's on the weekly time frame. It has lost the 10 EMA. And I'm just wondering if this will continue to drift down to the 50, which again at 55 would still be amazing. But given it was a 125 not so long ago, that's going to feel quite painful for people. But yeah, we've not retested this in nearly a year, the 50 EMA. So 55 could be a level to look at. Not really too bothered about platinum and palladium, although they're there if you want to have a look at them. And I think that's probably kind of it. Let's see what Vision's put. Hard to be hopeful of any alts until ETH recovers. Do you know, I don't often disagree, but I think ETH has been probably one of the biggest letdowns. So yes, it may still hold the market share, but I think ETH could tread water and the rest of the alts rally. It might not do much for Bitcoin dominance, but it has just been poor. It really has. So I could actually see, if this starts to tread water, alts like Solana, like BNB start to pick up and try and lift the rest of the market up. That could happen. I think there's a far greater chance, and I'm not saying it's great, but greater chance that Solana and BNB and XRP and a few of the others do better than Ethereum will. That's just my thoughts on it, but I think that is where it is. If someone asked me about MicroStrategy earlier, that's the level I'm still looking at, which is sort of that 110 breaking of that, which it did dip below, but it managed to bounce back up. But I'd certainly be keeping my eye on that level for those of you that have invested in it. I mean, guessing it's double figures, it could well be a good buy for the cycle to hold just for a cycle. Same way I suppose we're buying stocks there. BTC ownership, 696k less BTC for retail, 800k more for businesses. I have no idea what we're talking about here. But does the increase the likelihood of institutional collusion in the future? Collusion, I'm not sure. To be honest, I mean, when you talk about institutions, I didn't bring it up because it's a bank holiday yesterday, so we can't really see any major inflows from BTC from yesterday. But I mean, it's just BlackRock, really, isn't it? I mean, I know Fidelity has 11,000. There's nothing to be sniffed at. But, BlackRock's got like 780,000. So these are millions rather than Bitcoin amounts. Strategy obviously has over 700,000 now as well. I don't really see Strategy and BlackRock colluding. So I get what you're saying. I'm not sure that they are, they're the enemy we ask for. That's who we get. They will just keep on buying this thing. They are more than happy to. And okay, we are seeing, sells. I get that, but investors will be investors. That doesn't bother them. They will sell when they need to, but I imagine they will be happy to step back in at lower prices. Absolutely. So yeah. I'm going to just call it there because I think otherwise I'm just going to end up repeating myself. As I mentioned, why didn't that not change? Yeah, as I mentioned, I honestly don't think too much has really gone on right now. Big levels to look for. 72,000. We break and hold above that. We can start talking about maybe a relief rally to 80k, but we really need to break and stay above it. Anything, leading up to that is unfortunately just noise. Similarly, I'm going to call it 66,000. We stay above that. Yeah, we might see movement between that 72, 66,000. But if we can keep those two levels, I think we're okay. A loss of 66, I'm saying we're retesting the 60 and maybe going lower. So if you can't be bothered to look at the charts, there would be the alerts I would be setting to go through. In terms of everything else, I do believe there'll be a trading pub on Thursday. As usual, I will do I don't know what time on Friday, but I will do a charting call. It's half term though, so I've got to kind of fit it around sort of entertaining the kids. So we will manage that as best we can. I'll probably try and do it in the morning if I can. And other than that, just as the title said, just have a think about what it is you're trying to get out of Bitcoin. Maybe just have a fresh perspective, a fresh approach to what it is you're trying to achieve. And it's fine if you just categorically disagree that we're not in a bear market, it's just a pullback. Ignore everything I've just said. Okay, I'm not here to try and convince you otherwise. That's just where my opinion is. But if you are of that camp and yet you are still mindlessly holding stuff and you're wondering why, and you're too afraid to sell it because you don't want to accept the loss, that's fine. Do you have the runway? Do you have the time? Do you have the ability to ride it out 4 more years? Do you have the confidence in whatever assets you're in that they're going to be there in 4 years' time? And if they are, perfect. You're actually in the best position possible. You don't need to make a decision. You can just go and chill. But if any of those is a no, and you realize you do need to make a decision, then have that thought process. Doesn't mean sell now, but it means if an opportunity approaches and you still feel uncomfortable, or you still feel that there's further falling to go, maybe take a little bit of risk off the table. That's all I'm trying to encourage with me rabbiting on about this. Sorry, I've got a really itchy neck now. And that's it. I hope everyone enjoys the rest of the week. I know it's a bit quiet on Discord, but if anyone, is up for trading, then please, tell me what you're doing. I'll try and keep you a bit more up to date with what I'm doing. I'm trying to get into a little bit of the AI time in my downtimes. It's good to see that channel has just started. Hopefully we'll get some good chat going in there about AI and everything else. Enjoy the rest of your evening. Enjoy the rest of your week. I'll see you all on Thursday. And if not, then I'll see you Friday. Otherwise, I'll speak to you all soon. Cheers now.